bears were so close. They were so close to pulling the S&P 500 back down into the trading range that we had been in since the beginning of January. They couldn't do it. They could not. And so when the market can't do something, it does the opposite. And that's what happened. So the bulls capitalized. They pushed the S&P 500 higher, a little bit higher than what it was the previous week. Couldn't make a new high, but they were pretty close. And so let's look at where we are in the U.S. markets, and then let's get into the operating plan for this week, what we like, what happened last week. Real quick summary of that. So first things first that we always look at is momentum. And the reason that we look at momentum is it tells us which markets to focus on. So right now we want to be focused on the U.S. equities markets because the S&P 500 is outpacing the MSCI All World ex-USA Index and shorter term treasuries on a 12-month basis. Here's a chart of it. It's been the relationship for a while now, and until that dynamic changes, we're going to continue to focus on U.S. markets. The second thing is large caps are underperforming small caps. That relationship has started to tighten, but small caps still beating large caps. The second thing is the growth versus value. That's the second style that we're looking at. It's not even close. It's not even close. Growth is killing value. Value is not on highs. Growth is right there. It's just not even close. So growth over value. When we add all this up, we get our barometer reading. The barometer reading is a confirmation and it's a signal to tell us being risk on or risk off. Right now we want to be risk on stance. So we want to take risk in the market, appropriate risk, but we want to take risks. So with all that, let's get a little bit deeper into the S&P 500. Let's look at a weekly chart of it and look at the price action close up. Here, right here, this little guy right here, this candle, support was held. So what the bears were hoping for is a sell trigger. They could not get it. So the bulls capitalized, and you can see how they held support and closed a little bit higher than the previous week. So there was no sell trigger. It held support, and unless the S&P 500 falls below this support level, it's still in a bullish stance. This is simply a smaller flag, or could be forming a smaller flag within this bull channel. So looks good right now for the S&P 500. We'll see if they can continue to hold above support, or if next week they come in, the bears come in and drag the S&P 500 down. But right now it looks bullish for the S&P 500. All right, let's get into a little bit more detail about the current portfolio and then what we've got going on for this week. What's the plan for this week? So first things first, let's talk about commodities. Commodities, look, they've been trading sideways for so long now, and we've bought them. And if they break out to the upside, we could see a great move. There's an old saying for technical analysis or chartist or whatever, and it's the larger the base, the higher in space. So what that means is that the longer something trades in a sideways movement and then it breaks out to the upside, you can see a great move, a big move to the upside. I don't know if that will be the case with commodities, but we're going to hold tight and see if we can get a strong breakout to the upside and some bullish price action. So right now, hold on commodities. When we look at our treasury position, God, that thing, I tell you what, like every time I think it's going to go to the downside, break to a new low, we have a Teddy turnaround, we've got a Betty bounce, it bounces right back to the upside to the top of the trading range. So we've been just stuck in this trading range, but if we get a break to the downside, we're going to stop out of that thing. Because if we do see a break to the downside, we could see again a large move in treasuries, and frankly, that would be a spike in interest rates. So we don't know if it will break to the downside, but we're going to watch it really closely. We're pretty close to getting stopped out there. When we look at international, no international positions. We've been scaling out international for a while now, a long time. Most of them were done a long time ago. We held on to one until the previous week, and then that was the last position that we had international. So no international, and frankly, no plans to get international until that relationship between the S&P 500 and the MSCI All World ex-USA Index changes. And then when we look at our U.S. equities positions, our U.S. sectors, they look really good. Healthcare looks good. Transportation looks good. U.S. aerospace and defense looks good, and technology looks good. So all of those look good. And I want to show you real quick transportation. Transportation is important because it is one of those sectors that you definitely want to see rising with the market, the broad market, and we're finally starting to see that with the breakout from last week. So when you see this, you can see that the transportation index broke out to a new high from that sideways trading range, so that looks good. As far as this week, adding in new positions, we're not going to do it. We don't have any plans for it. We're going to continue to hold the current risk profile and then quite possibly adjust some stops up. So right now, we're going to watch the current positions, hopefully adjust some stops up this week, and see what happens if we get stopped out of any positions that aren't performing and take some risk off the table. So with that, have a great week, and we'll talk to you next time.